Hi everyone and welcome to today's More Report on Friday the 4th of March with me, Rich Perry, Market Analyst at Handtech Markets. It's Non-farm Payrolls Day and the markets are positioning ahead of that payrolls report. The equity markets are fairly flat. I mean, the Wall Street markets closed mildly high into the close yesterday, and also Asian markets similarly. Um, and we're seeing a sort of basically the same sort of situation in Europe. Although you've got the FTSE 100, which is outperforming today, and that's coming on the back of strong performance on the mining sector. Now, what we have got today is an interesting turnaround because we've seen the dollar that weakened yesterday, and that weakness came in the wake of the ISM non-manufacturing data. The data was slightly positive, but there was a component on the employment side which showed a move into contraction territory, which I think spooked the markets a little bit, and certainly the dollar had quite a significant decline yesterday. Not massively showing through on the treasuries, but certainly we had an interesting move on the Chinese yuan, which pulled lower, and that is interesting. And in terms of commodity prices, though, very much in consolidation mode. You've got the oil price, which has basically been just slightly eking out gains, but still really straining to make that breakout. You've got a similar sort of move on the Brent crude price, which is going basically sideways. But these commodity prices, in terms of copper, continue to move higher. So that is certainly helping drive the expectation of equity emerging market currencies being higher, and that is also coming through with gold. Here we see the gold price pushing on higher, and that's actually now broken out above 1260, which was that February high. Now, obviously going to do an analysis of gold in a bit, but the other one I wanted to show you was this Aussie dollar, which again is also trading up towards big resistance levels. Big resistance overhead at 73.85, that is. So that is really is testing highs, but obviously that is again being helped higher by all these commodity price gains that we're seeing on markets in the last few weeks. So it is non-farm payrolls today, and the market expecting. Let me just see, where is it? Come on. There we go. Market is expecting a headline number of 190,000. So it's, well, obviously higher than 151 last month. And you've got to check out revisions on prior months. It's a very highly revised data set, is the payrolls data. So watch out for that. But the big move, I think, will be coming in the average hourly earnings. This is the component that markets are increasingly looking at. We had this very strong month last month, 0.5% up on the month-on-month data, but the year-on-year data continues to sort of just eke out further gains higher. Now that's coming amidst sort of this improvement in the inflation data in the States. And you'd need to see wages picking up alongside inflation, otherwise real earnings see a decline. So you'd want the Fed would certainly want to see earnings growth coming through as well. So that is an important part of the data. In terms of unemployment, 4.9% is the expectation, and that is in line with last month. And the other interesting point is the fact that the participation rate has actually been picking up in the last few months, isn't it? That would be an interesting one to watch. 62.7 was last month, so that is beginning to sort of turn around this decline that we've seen in the participation rate. So again, an interesting component to watch out there. So that payrolls report comes out at 1:30 today, UK time. Normally, you would expect markets to just start to consolidate in front of that report and that announcement. So my chart today is the Canadian dollar. Now, the Canadian dollar, I did this last week on the breakdown of this descending triangle, and that descending triangle gave us a downside target initially, and I stress that initially, of 33.80 on a conservative basis. But you can get an aggressive downside target from measuring the height of the of the pattern, and then project it down from the breakdown, and that gives you 3170, 3180 as your sort of downside target. So we've still got further downside potential in this move, I think. And looking at the momentum indicators, you'd certainly still say that there is weak momentum or strong momentum to the downside, but bearish momentum, you'd still argue is intact. Now you've also broken below the 34.55 level. That was an old key support, breakout support. That's come through. So that is your initial sort of resistance on the upside, I suppose you'd say. But looking at the hourly chart, you'd also say that 35 figure is a key resistance near term as well. Old support back end of last week, and again through the early part of this week, and became resistance on Wednesday. On that little rally that we saw on Wednesday, fell away. So the old support becomes new resistance at 35 figure. So that is again adding to the resistance overhead. So I'd use any sort of rallies that you get on this dollar CAD chart as a chance to sell, because you'd certainly say since the breakdown, 60 on the RSI on the hourly is becoming a basis of where the sellers start to return again. And also on the MACD lines around neutral. Stochastics up towards again a selling point. So these are all situations that you've seen this move unwinding in the last sort of 12 to 18 hours. Now you'd also arguably drawing a downtrend there. So you're sort of rallying towards that downtrend near term as well. So these are all suggestions that these rallies are a chance to sell on this dollar CAD chart. And I think that's going to continue really. Certainly, if the oil price continues to rally, I think dollar CAD will continue to fall, and that is the expectation I think that we've got from this chart. So I wish you good luck in your trading on dollar CAD today, and also in front of payrolls. And I will speak to you later. Thank you.